you now 1st April is approaching. So select the electives properly in which you all are conversant with. Okay. Negative removed. Okay. 4 papers compulsory. That's okay. Now this everyone knows. Okay. So select the electives properly as per your comfort level. Okay. So let's start ratio analysis. Okay. Good evening. Evening everyone. So ratio analysis here. Today's topic is ratio analysis, basic. Okay. Basically, remember ratio analysis is of basically two types. Earlier means before 1980s, 85. Okay. Roughly 1990 also you can call it. The classification of ratios was done as traditional ratios. Traditional. Now we all are focusing on functional. This is the one which we use now. We don't use the traditional ratio analysis now. In traditional, what used to happen, there were three types of ratios: balance sheet ratios, P&L ratios, and composite ratios. So, if the current ratio, if I would call it, it is current asset upon current liability. So, it was basically balance sheet ratio. So, the elements which came from balance sheet were called as balance sheet ratio. The elements which came from P&L were called as P&L ratio. And some part come from P&L, some part came from balance sheet. That was called as a composite ratio. But that is gone now. Everything is gone. This now we all focus on functional function. What is the job that ratio is doing? Okay. So according to functional ratios, there are three types of ratios: profitability, solvency, and turnover. These are the three main types of ratios. Okay. Good evening, everyone. These are the three main types of ratios. Okay. So everyone, yeah, new who have just now joined, welcome to the foundation class. Okay, class number 3 of selection batch. Okay, yeah. So there are three types of ratios: profitability, solvency, and turnover. Profitability ratio that will again be divided into five types: operating, EPS, earning per share, price to earning, gross profit, and net profit. So these are the five types of ratios. Profitability ratio will have five types: operating profit, EPS, price to earning, gross profit, and net profit. Okay. Then there will be solvency ratios. Solvency will be of two types mainly: short-term solvency and long-term solvency. Short-term will be again of two types: current and liquid. And long term will be again, short term will be again, first is current and liquid, and second will be DSCR and ICR, means debt service coverage ratio and interest coverage ratio. These are the two ratios. Okay. Then long term solvency will be of debt equity and fixed assets. Debt equity and fixed assets. Then you have turnover ratios. Mainly remember three turnover ratios are important. One is inventory, second is debtor, and third is debtor period. This one. These three are very important: inventory turnover, debtor period, turnover, and debtor period. Okay. Once you understand debtor turnover, you will understand creditor turnover easily because it is same. Similarly, debtor period, if you understand, you will immediately understand creditor period also. Okay. Okay. Now, as I've told you all these ratios, okay, before that, let me check few points from your side. Okay, let me check. What are the elements of trading account? Who can write to me? Trading account. Which all elements are there in trading account? Who can tell me? Elements of trading account. What all elements are there in trading account? Right? Otherwise, what happens? I go on telling you all these ratios: P&L ratio, balance sheet ratio, expense income. Yeah, no, that is a part of this P&L actually. See here, I'll give you some basics, okay? Yeah, purchase, sales, okay. Okay, let's not, let me come to the basics, okay? Let me come to the basics first. Okay. Um, this I think so. I've complete done this or not? Entries. First entry which you do always is what? Journal, right? We first do the journal entry. Journal is of which types? You have done this in accounting, basic accounting, right? Journal is of two types: cash book and bank book, right? Bank book and cash book, right? These are the two types of journals basically, isn't it? Cash book is again of two types, two columnar and three columnar. Forget it. We won't go into that. So basically, journal. What do we do with journal? In journal, what do we do is we do all the entries. It's like that daily diary which some people write, right? Same thing. Means if somebody goes in the shop and purchases, the shopkeeper writes it in the book. That is called as a cash book of that person. So from journal we get, next step is what we get is ledger. Ledger means what? Out of this journal, if somebody is pending to pay, see here, always remember, pending payment, only pending payment will be mentioned in the ledger. Okay? Pending payment, that will be mentioned in the ledger. Always. In the journal, if I write that XYZ has taken 1,000 rupees and then he has not given back, so that will come in the ledger. If I have taken money from somebody and not given back, so that will come in the ledger. So ledger means what? Any pending payment will come in the ledger. From ledger, what happens? Suppose if this ledger continues, means that person doesn't pay. This month he has taken, next month not paid, next month not paid, any month not paid. So when I prepare the TB, trial balance, okay, then what happens? Whatever is pending in this ledger, whichever names are pending in this ledger, which have not been settled, remember, not settled. This is very important. Not settled. Okay. Everything, if it is settled, then it won't come in this trial balance. So whichever is not settled will come in this trial balance. From trial balance, what happens? From trial balance, the items move to two parts basically. Three parts you can call. Okay. Three. One is trading account. Trading, basically trading. Yeah, I'll write that only. Trading account. Then P&L account. And last one is balance sheet. Okay. Balance sheet. Got it? So this is a basic movement of any entry from journal to ledger, ledger to trial balance to then it moves from here to something will go over here, something will go over here, and something will go over here. Okay. Okay. Now, as a CIB student, I'll tell you that also. What will go over P&L? Remember, any transaction which is of the nominal nature, nominal, okay, which will get closed every year, okay, that will always go in these two accounts: nominal expenses, right? Nominal. We have three accounts, right? Which are the three accounts? Real. Then what? Personal. And third one is nominal, right? So always remember one basic rule. Nominal. Always remember one basic rule. Nominal account will always go in this section. Always. Always. What is nominal account? Nominal account means all the expenses, office expenses, all these things. Okay. So they'll go in this trading and P&L. But remember, real and personal account, these two will always move in balance sheet. They'll always go over here. So keep this basic in mind. Nominal account will always go in P&L, and real and personal account will always go in this balance sheet. Why? Why does it go there? Because nominal accounts, always remember, get closed at the year end. Closed. P&L account is closed at the year end. What is P&L account? For the year. What do we say in P&L account? For the year. For, right? For the year. Right? Means what? In that year, whatever has happened, that is P&L and this trading account. But balance sheet, what do we say? As on. Okay. So as on means what? Personal and real. As on this For the year, it is over year. So got it, everyone? These are the basics of accounting. Once you understand the logic, then now I'll tell you what is this trading account and P&L account and whatever goes in this. Okay. Let me bring in one slide over here because you'll be needing one slide now. Hold on. Yeah. Say this. Now let's come to trading account. Before that, tell me journal, ledger, trial balance, trading account, P&L account, and balance sheet. Among these, which are to be balanced by a human being, means by putting external figures, which are to be balanced by putting external figures. Okay. Among these, which are to be balanced by putting external figures, means in trial balance, do I have to put the figures? Balance sheet, do I have to put the figures? Trading P&L or ledger or where? Where do I put the figures for balancing it? Who can tell me? By putting external figures. Now everyone will get clean bold on this. I know. Almost many of you will get clean bold. Okay. No. Clean bold, clean bold. Almost everyone is clean bold. Okay. Remember one basic rule. Okay. One basic rule. Remember everyone. See here, that the name of that the means that account, that what we call balance sheet or trading account or any statement of account which is having the word balance in it. Remember this, whichever is having the word balance in it. Okay, this see this trial balance, balance sheet, balance. So whichever has the word balance in it will automatically balance. Automatically balance. Remember this. Always keep this in mind. It should automatically balance. You need not put external figures into this. So that's why what do we say? Assets and liabilities should match with each other in our normal thing, right? They should match with each other. Match means what? You shouldn't match it forcefully. They should get matched like that only. So from where will they get matched? Because of all these internal items over here, other things. And whichever element, whichever statement of account does not have the word balance in it, in all these we have to put external figures. Trading account. Okay, now I'll show you trading account. See this trading account. Let me come to this trading account. What is trading account? See this trading account means what? It is for the year so and so, whatever it is. Okay. So in trading account, what happens? It's like this. Two parts again, right? What? Credit, debit. Year credit, year debit, right? In trading account, what do we do? Always remember few basics I'll tell you. Opening. Opening means stock. Opening plus purchase plus wages plus carriage. Okay, carriage. These are all the elements on the debit side, and credit side sales, and last one is closing. Closing stock actually. Okay. So opening stock, purchase of stock, wages, carriage. Carriage means carriage inward and outward. See here, carriage will always have two parts. I'll write it over here. Carriage will always have two parts. Okay. We'll have two parts. What? Carriage inward and carriage outward. Okay. Always remember this. Now, what is carriage inward and what is carriage outward? Who can tell me? Carriage inward means here. We all have done our JIB, right? But the problem over here is we have learned it. We have not understood it. We have learned the things. So that is the problem. Okay, now I'll tell you one important part. Carriage inward means what and carriage outward means what? Everyone, I'll tell you. Cost add in material, correct. One that is carriage inward. But for carriage outward, what is carriage outward? Inward is very easy. Everyone will tell me inward. Problem is of the outward. So what is carriage outward? Okay, let me come to this. Many of us feel that carriage inward means, suppose if I am bringing some material, this is my factory. This is my factory. Okay, factory. Okay. So if I am bringing some material, raw material, raw. Okay. So whatever is the cost required will come over here, carriage inward. And outward means whenever I sell something, sell, right? Sale. So whatever expenses are there, that will come over here. That's what the general tendency is, right? You all guys feel the same? You all guys feel the same? Raw material coming in will be inward. Sales going out, whatever the expenses are, marketing expenses, everything, they'll come in this outward. Is it so? Everyone feels that? Who can tell me? Yeah. So, understand. Anyone feel so? That carriage inward means this and carriage outward means this. See here, I'll tell you something. Okay? Important part over here. Everyone pay attention. This concept is wrong. Okay? This concept is totally not correct. Half part is correct. Half part is not correct. What is inward? What is outward? Okay. Look at this. One sec. See here. What does it mean? It means that suppose if this is my factory, okay, this is my go down, I'll call it go down factory and that inventory department, go down. Okay, this is the gate of my factory, main gate. This is the entrance. Now when I bring in the material, raw material, okay, raw, so that raw material will come to me through either through truck or through railway or anything. So let it be anything. So this material when it is brought up to the gate of my factory, remember this gate of my factory. This is known as carriage outward. This is known as carriage outward. And what is inward? Once the truck comes over here, it will stand on the gate. From the gate, I have to take the goods and put it in the godown where it is required to be kept. So this part is known as carriage inward. Inward. Okay. So inward and outward both are for raw material only. They are not for sales. For sales, whatever expense come, that is under marketing expenses and that come under P&L account. That doesn't come under this trading account. Okay. So got it clear? Everyone understood this? Type yes if you have understood it. Let me remove it then. Okay, done. I'll remove this now. Chalo, move on. Now, let me come to this. See this. So, once I have all this opening, purchase, wages, carriage and sales and closing, then if let's say this is 100 rupees total. This is total 100 and this is total 80. So this is 100, this is 80. So there is a difference. So what will I do? I'll put an extra figure of 20 over here. I'll add this 20 and this 20 will be called as GP, gross profit. Because my debit side is less, credit side is more. So I've got more money coming in. My going out money is lesser. So this is the gross profit to me. This gross profit will move towards, where will it move? This will move to P&L account. What is P&L? See this, P&L. P&L again the same logic. What? Two parts, right? Credit and debit, right? This gross profit, which was on the debit side over here, will move to credit side. Now GP will come over here, gross profit. Okay. Then what is on the debit side? Then indirect expenses. Remember, all these expenses over here are direct expenses. Opening, purchase, wages, carriage means these are directly purchasing the material. These are required for production. But here these are indirect expenses. Indirect means what? Indirect means salary, my electricity expenses, my office expenses, all these white collar jobs. P&L is mainly white collar jobs. Trading is mainly blue collar jobs. So again the same thing over here. Gross profit is over here. And on the left side, I'm having all the indirect expenses, salaries, stationery, everything. Okay. Main part over here is always depreciation. Depreciation will be on the debit side of P&L. Okay. So again, let's say this is 100, and let's say this is again 70. So now what happens? 30 rupees, I have to add it again. So this becomes my GP, gross net profit, NP, because gross profit was over here. This is my net profit. This is known as bottom line. Always remember, in CIB language we call it bottom line, and this is called as top line. This GP is always called as top line. This word you'll always hear somewhere in the news channels. Okay, top line growth, bottom line growth. So this net profit of 30 rupees, where will it go now? It should go somewhere. So where will it go? It will go into balance sheet, right? Balance sheet. Where will it go? What is the balance sheet? How to figure out the balance sheets here? Let's go to balance sheet now. Once you understand the basics, all the ratio analysis and everything becomes easy for you. Now look at the balance sheet. What is the balance sheet? Balance sheet means simple. See here. Keep it very simple. Always try to keep it simple. I always believe in that. Balance sheet will have two parts again. One is assets, second is liabilities. Okay. Now, always remember, asset and liability should be equal to each other. They should balance each other automatically. It's not you, like over here. What did you do? You put the figure 20, you put the figure 30 over here. But in balance sheet, you need not put any figure. It should automatically balance. Only and then understand your accounting, whatever you have done, journal, everything, that is correct. Okay. Now, this asset should always be equal to the liability. Now, what are the types of assets? Remember, again, come to the basics here. Assets, there are four types. Okay, two types of assets, two types of liabilities. What is this? One is current asset, second is fixed asset. Some books call it long-term asset. LTA they call it, long-term asset. Some books call it fixed asset. Similarly, over here, current liability and fixed liability. Some books call it long-term liability, LTL. Okay, one and the same. Okay. Now this balance sheet, this will again remember, you have to remember some basic formulae for this. Okay. The formulae first, what I told you, asset equals to liabilities. Now second part over here is this, this cross will have two parts. See here, this will have two parts and this will have two parts. And this cross won't have anything. That is simple, nothing important over here. These two are very difficult. Okay. What all are there in current assets? So remember, current assets we always have what? Number one, inventory. Inventory. Sir, I'm not asking you the questions because what happens otherwise it will just be a time pass over here. Okay. Means I'll ask you, wait, font not visible properly due to black background. Let me see if it is visible to others. Everyone else, is it visible? You guys? Everyone is able to see this properly or no? Because one of the complaint I've received not properly visible. Visible, no? Because why have I taken this black red is because red is the opposite color of this black. That's why it's purely visible over here. Okay. So that's why there is no other color available also for this pen and this chalk. Okay. So there is no other color available. So inventory. Second one is here. First is inventory. Okay. Second one, what we have, that is cash. Cash, we'll write it over here. I'll write on this side. Then we have debtors. Debtors. And then we have prepaid expenses. Prepaid. Remember, only these four are the important ones for your CAIB. Prepaid expenses. Okay. Only these four are required. Inventory, prepaid, cash, and debtors. Out of this cash and debtors, these are called as liquid assets. Liquid. Okay. These are called as liquid assets. Only these two. Remember. Okay. These two are called as liquid assets. And these four together, inventory, prepaid, cash, debtors, these four together are called as current assets. So what do you understand? Liquid asset is a part of current asset. Suppose if this is current asset, then liquid asset is this part. This is liquid asset and this is full is current asset. So liquid asset is a part of current asset. Okay. So inventory, prepaid, cash, debtors. Cash and debtors become liquid assets. Similarly on this side, Long-term liability. Here are two types of liabilities. One is outside, and second one is inside. Outside inside means what? Outside liability means from other institutions. Like suppose if I've taken it from bank loan, if I've given a bond, I've bond issued, I'll write it. Bond issued. Okay, not bond which I'm having. Bonds issued. So if I've issued a bond, it means I've taken money from somebody and then issued the bond. So that's why this becomes an outside liability. Here I have to give compulsory payment. And what is inside liability? Inside liability means of the owner. Owner. Okay. Of the owner, what will it be then? It will be number one, the stocks, shares. Okay. Then net profit, NP. Then reserves and surplus, R&S. Reserves and surplus. These are the three main inside liabilities. Outside is always loan and bond issued. Inside is always stock, net profit, and reserves and surplus. And both of them together form the part of long-term liabilities. Long-term, very long-term. Okay. What is long-term? What is short-term? Which is to be covered in 1 year. 1 year. Again, this also 1 year. Whichever year, if I am having the current asset, it will give me money in 1 year. If I am having the liquid asset, it will give me money right now. Right now. Cash, it can give me money right now. Debtors, if I've given material to somebody, I can go tomorrow morning on his door and get back the money. Theoretically. Okay. So that's why cash and debtors, they become the current liquid assets, and within 1 year whatever I can realize, that is called as current assets, and whatever I have to pay within 1 year is called as current liability. So what is that? This becomes creditors. These are all within 1 year. Creditors. Then what? EMI. If I have to pay my EMIs, right, every month I have to pay. Creditors, this. Then what? Payables. There are many names as such. Payables. OD, CCOD, right? CCOD. All these become the part of current liabilities. And what is this long-term liability, long-term asset? Now, long-term asset can be, it's like this. Let me see what are the comments. Anyone? Why stock is in the long-term? Stock, which one? Stock and stock. Okay, it's called as shares. Actually, I've written it stock. That's that US language. I teach that CIB guys na in US. That's why I take the classes of theirs. So there they don't call it shares. They call it stock. This is shares actually. Shares. Okay. So this is shares. Yeah. Correct, Sharat. This is shares. We call it in India. We call it shares, but in foreign countries, in US, UK, they call it stocks. Okay, mainly. Even in India, we call them, but we normally call them shares. Okay. Now, long-term assets. See this. Long-term assets. Two, three things we know very easily. Land. Then what? Building. Or everyone will be able to tell me. Machinery. Right? Machinery. Then what? Computer. All these things everyone will tell me. Okay, computer. All these things means what? What is a long-term asset? Mainly everyone will tell me what I can touch, what is static. That is the basic logic, but that is wrong. Fixed asset is not that which I can touch or which is static. No. Fixed asset means it is a asset, capital asset. It is an asset on which I produce something. I make the manufacturing. If I am having a building which I am not using it for the factory, I'm using it for something else. So that doesn't become my fixed asset. Okay? Computer. Everyone says computer is a fixed asset, but I'll tell you one thing. Computer, if I'm the computer seller, I'm the dealer of computer. In that case, that computer is not a fixed asset for me. That is a liquid current asset for me because that becomes my inventory. Building, flat. Flat we call it fixed asset. Suppose if I am the builder, developer, I develop all the buildings. So for me, that flat is not a fixed asset. For me, that is inventory, current asset. So similarly, understand fixed asset and current asset change on the function which I am performing. If I am performing the function of a builder, that building for me is just a current asset. If I'm the consumer, means using it, then that building becomes a fixed asset for me. Okay. Now, as you have got these all these points, now I'll go to the ratio part, because what happens once this is clear, only then you can move on. Now let's come to the ratios. The ratios are very simple now. If you have understood this trading, P&L, and this balance sheet, okay, then it's very easy. Did you read it something like this earlier? Yeah, patent. Yeah, patent copyright. That's a good point. What about patent copyright? Where will it come? Patent copyright, where will it come in this balance sheet? After all, it should come somewhere. So that is called as a soft asset. That becomes a part of long-term assets. This, it comes over here. Okay. So patent, copyright, all these things are soft assets. Okay. Copyright, trademark, right? Copyright, trademark, all these are soft assets. Okay. So these come under fixed assets. Got it? Yeah. Long term goodwill, yeah, everything, all that patent, copyright, goodwill, trademark, everything comes under that only. Okay, move on. Chalo. Now let's come to this ratio part. In this ratio part, here operating ratios, EPS, PE, gross profit, and net profit. Now these ratios are very simple. Let me show you that also. See this. Am I having all those ratios over here? Fixed asset, yeah, uh, yeah. Mainly I'm having some of them, almost, not all. I'll write them, not an issue. Current ratio. Current ratio equals to, look at this, I'll expand this. Current ratio equals to current asset upon current liability. Simple. Current asset means all those four things which we told. Current liability means what? Whatever was that current liability, payables and all those things, right? Current assets, inventory, debtors, all these things, prepaid expenses, cash. Current liability, creditors, bank CC, OD, term loan, etc. Term loan EMI, not term loan. Term loan EMI is always the current liability. Term loan is a long-term liability. Liquid ratio, liquid asset upon current liabilities. Liquid asset means only two. Which one? Cash and debtor. Debtor. See this over here. Debtor and cash, right? And this inventory vagara, that is a part of current asset. DSCR. Okay. Now this, look at this. DSCR. Before coming to this DSCR, let me show you some ratio over here. Which, this one. See this. This. We are directly hitting this part. Because operating EPS, PE, gross profit, net profit, I think so. I have covered this somewhere or not, I don't remember. Then Ebitda and all those things I had covered, because that is a basic rule. Ebitda and EBIT, did I cover it somewhere in my first class or second class? Ebitda, EBIT, then operating expenses. I think I had covered this, isn't it? What do you say? Do you remember? No, I have not covered this in first lecture. Okay, in some other class I might have covered here. Okay, let me clarify that point also. See this, all these profitability ratios over here, they'll get cleared in your mind once I come to one, show you something. Okay, see this, where is it? Ah, first cover these ratios, then I'll come to that EBITDA and everything. Okay, DSCR, debt service coverage ratio. So ability to service the installment, whether I'll be able to pay the installment next year. And how is that calculated? The calculation is simple. This is the numerator part, net profit before tax plus depreciation plus interest on long-term debt. This is the numerator part, and this is the denominator part. Total EMI for the year, your bank plus other bank, total EMIs, okay? Plus again this interest on long-term debt. This interest on long-term debt will come over here. So this is the numerator, this is the denominator, okay? So this will be like this. Actually, it will be like this. This will be upon over here. This will be the line in between, okay? So this is the numerator, this is the denominator. Got it? So this is called as DSCR. ICR, interest coverage ratio, means earning before interest, NPAT, net profit before tax, EBIT, upon interest on long-term debt. Here only two parts are used. Debt equity ratio, long-term debt upon total equity. Now debt equity ratio means what? See this, it's over here. Outside liability upon inside liability. That is called as debt equity. Means loans, bond issued, whatever I have taken it from others, upon whatever is mine. This is mine. Okay. So that is basically debt equity ratio. Long term debt means outside upon inside. Okay, that is basically debt equity. Fixed asset ratio means what? Fixed assets upon total long term means over here. Total fixed assets over here, all these upon total this means total FA upon total FL. Total FA upon total FL, outside plus inside. That is called as fixed asset ratio. Okay. So that is fixed asset. Now, before going ahead, okay, now I have to show you that EBITDA. But before that, everyone download Adda 24/7 app. Those who are watching on YouTube, download Adda 24/7 app on your mobile. You'll get premium study materials, live classes, ebooks, everything. Okay. What is required for clearing JIB and CIB over here? Okay. Also subscribe to Officers Adda 24/7 YouTube channel. I am personally taking at every morning 6:30 a.m. JIB, 7:30 a.m. CIB BFM, and 8:30 a.m. CIB ABM. Okay. So I'm personally taking those classes on a daily basis. So again, as you have got the same knowledge, same level of knowledge, same easiness, you'll get it over there also. Those who are in the class, you also subscribe to it immediately. Okay. Yeah. Now let me come to this EBITDA, EBIT, all those things. Okay. Because that is also basic, and that is in fact, that is the basic of any ratio analysis. One sec. Let me see, where was it? Over here. Okay. This is a free slide. Okay. Now, what is this all? One thing. Let me have some. What is all this basically? Remember, first thing, uh, let's call this EBITDA. EBITDA. EBITDA, we call it. EBITDA. Okay. EBITDA means what? Earning before interest, taxation, depreciation, and amortization. Amortization means what? Here, all these other words are easy. Interest, you know. Interest to be paid. Okay. To be paid. Remember, not to be received. To be paid. Okay. Interest which is to be paid is taken over here. Tax, you know. Depreciation, you know. Amortization means what? Wherever I take the loan and it gets converted. Here, I take the loan. Remember, take the loan. It's not I give the loan. Okay. So wherever I take the loan and I convert it into EMIs. Here, amortization basically means only converting to EMIs. Home loan which we give is an amortization loan. Means I give somebody 20 lakhs and that person repays me the same amount in 15 years. Okay. Similarly, that all our commercial loans also, term loans, those are all amortization loans. Okay. So from this EBITDA, when I subtract depreciation, and amortization, means that EMI conversion. Okay. Amortization. When I subtract that, then I get EBIT, EBIT, EBIT. Okay. Now, what is this EBIT? This EBIT's other name is operating expenses. Operating expenses. Okay. EBIT. This is the other name for EBIT. Operating expenses. One sec. Expenses. Okay. This is the other name for EBIT. Operating expenses. From this EBIT, when I subtract minus interest, minus tax, always remember, tax I'll take at the end. It can't be tax first and interest later. It will be first interest, then tax. And then what I get is known as NPAT. NPAT. Net profit after tax. Okay, net profit after tax. This NPAT goes in two ways. Two ways. Either I'll give it as a dividend to shareholders. Okay, either I can give that, or second way is I won't give any dividend. Like Reliance never gives any dividend. You just see your Reliance, those who have bought some Reliance shares. Okay, just see, Reliance never gives any dividend. Reliance, what does it do? It adds its own value. So what will it do? This NPAT will be transferred to reserves and surplus. Reserves and surplus. It will be transferred over there. Okay. So this NPAT can move in either directions. Either in share. It depends on the management, AGM. Okay. Annual general meeting, whatever is decided, that is done always. Okay. Now you'll say, sir, everything is done, but where is gross profit? EBITDA there, EBIT there, operating expenses. Where is gross profit? This is net profit. Agreed. Chalo. This comes as the net profit, and this comes in P&L. P&L is a net profit after tax, everything. But where is gross profit? This gross profit is above this. It is not taken over here. Gross profit comes first in the trading account. From here, I get EBITDA. From here, I get this. Before getting this EBITDA, what will I do? I'll subtract some stationary expenses, stationary and all those, electricity, everything. All these will go, and then EBITDA will come. Means all my running expenses, once I subtract my running expenses over here, okay, then whatever remains is called as EBITDA. Means salaries, electricity, then what my anything, 1,000 expenses are there, tea expense, right, and stationary expense, everything. All these go. Then it comes EBITDA. From EBITDA it comes EBIT it comes NPAT. NPAT goes either to this or that. Okay, yeah. So important to understand, this is called as operating expense. Operating expense means what? This ratio you'll always get in an exam. Tomorrow also we'll continue this ratio analysis only in foundation. Okay, because today I've clarified these doubts. Tomorrow I'll be doing the actual ratios. We'll be solving some numericals of actual ratio analysis. Okay, so that it'll be clear for you. Okay, so depreciation done, amortization, EBIT done, interest done, this done. Okay. Now, okay, let me see how many of you have doubts. Any doubt? Because NPAT means, okay, net profit after tax. Net profit after tax. After tax. Okay. EBIT means earning before interest and taxation. Shall I write it? Earning before interest and tax. Okay, and EBITDA means same, earning before interest, tax, depreciation and amortization. Above that it's gross profit. Gross profit means it's called as the top level expansion. Okay. Okay, top level expansion means what's here? As a CIB student, we must know some things over here. Okay, what do you mean by top line and bottom line? See here, whenever any company grows top line, you always hear, whenever you buy the shares also in the market. Okay, whenever you buy the shares from the stock market, you'll always hear these two words, top line and bottom line. So if any company mainly related to service industries, if any, like banks, private banks, these are the flavor always, right? So if any company's top line growth is best, or if it moves very fast, 20%, 30%, then remember that company is growing very well, very well. Okay, and if any company's top line is not growing properly, it means the basically see, your top line is growing means what? The sales are growing. If the sales are growing, it means the company is growing well. Simple. And bottom line, how to increase the bottom line? What does the company do? Company always hits in two parts. One is, always remember, any company will work, any company you might be having, right? What you all guys are working. So there are only two parts in any organization. One is sales and second is expenses. Okay, expense. So every company will try to do what? Increase the sales plus, and it will try to decrease the expense minus. So decreasing this expense comes in this bottom line. Increasing the sales comes over in this top line. So increasing the sales, company will hit you on a daily basis. Sell insurance. Where is the insurance coming? Two insurance policies per day. Or in a week, you have to get one mutual fund, one insurance. You all guys might be having these targets now or getting it somewhere in the meetings. So this is basically top line. And expense, how to reduce the expense? ATM, bring ATM, bring what? Internet banking, right? That is all increasing the bottom line, means reducing the expenses. The more any company goes towards mechanization, the more it goes, the more bottom line is increased. Okay, the more it grows goes towards that, more it line is increased. Do you know any company since 1994 when it started? One bank I know. Let me see how many of you know that bank. One bank I know since 1994 when it started. Okay, introduction tomorrow. I think so. Tomorrow it's there. Up to on 1st April we are starting with this main course. Okay, 1st April. So, one company. Do you know which one? Yeah, since 1994 it has grown at a CAGR. CAGR means what? CAGR. CAGR means compounded annualized growth rate. Okay, compounded CAGR, very important word for CIIB. Compounded annualized growth rate. It has grown at a rate of 25 to 30% on YOY basis, year to year basis, every year since 1994 till today. Every year 25 to 30% growth. Means if somebody had invested in this company, in this HDFC Bank, means I'm not a salesperson for HDFC Bank. Huh? It's nothing like that. ICICI Bank also, same logic. I mean, it has also grown. There are many banks. In fact, SBI has grown hugely. So, if anybody had invested at that time 100 rupees, today this that would have been around lakhs. Okay, because of 25 to 30% annualized growth. So, coming back to this point, forget this. We are not in the stock market. Okay, so this was basically basic about balance sheet. This was the basic about trading, P&L, and the ratios. EBITDA, you must get this sequence very clear in your mind. Gross profit, then EBITDA, then EBIT, then NPAT. NPAT moves to dividends or reserves. What are these reserves? Here, understand this reserve word also. A reserve word doesn't mean, suppose if I keep some reserves for my uh, let me say this. Suppose if I keep some reserves for my NPS, okay, means I'm expecting let's some NPS to grow in my bank. Suppose if I'm bank, I'm expecting the reserves NPS to grow. So what do? I make the provision. So that provision can also be called as reserve. So somebody might say, okay, I'll keep that provision only, but that provision doesn't come under these reserves. These reserves are free capital, free. After making that provision, whatever remains, that will be my under my reserves. I can't keep that NPA provisioning for this, right? NPA provisioning means what? That is the difference between that gross profit and net profit, right? NPA provisioning, let me write it over here. Where is it? Yeah. These are the problems. Tomorrow we'll be dealing with these problems. NPA provisioning means, let me write it over here for somebody. Okay. Say this gross profit GP minus NP equals to provisioning. So this this provision can't be taken as a reserves. Okay. This provision can't be taken as a reserve. Got it, everyone? So you can't take this as a free reserve over here because this is for the RBI. And this RBI says it should be 70% at least. Whatever you are expecting as NPAs to come in the future, at least 70% of them should be provisioned so that your not gross NPA, I would call it, not profit, GNPA, I'll call it, okay, and NNPA. I'll call it like this: GNPA and NNPA. So gross NPA, net NPA, and the subtraction of that is called as provisioning. And RBI says whatever your gross NPA you think might come in next year, you have to make a provision for 70% of that. Okay, but that does not come under any of these reserves. Okay, got it, everyone? Yeah. Full form. Okay, which full form do you want now, Somendra? Which full form do you want? Which one? Which one? Any full form? EBITDA. EBITDA I have already written. EBIT I have written. Earning before interest and taxation, and DA means depreciation and amortization. NPAT, net profit after tax. And what? Anything else? No, that was the only thing. EMI. These are the only things. NPAT done. P&L. These are the common things. Anything else? I don't think so. Chalo, we'll stop over here. Those who are watching on YouTube, okay? Yeah, CAGR, compound. I've written it, na? Compounded annualized growth rate. Have I written it? Yeah. See this. Compounded. Where will I write? You should be able to see it. I'll write it over here. Compounded, compounded, annualized, ANNUALISED, growth rate, growth rate. Okay, that is called as CAGR, compounded annualized growth rate. Okay, that is CAGR. Chalo, those who are watching on YouTube, kindly join the batches. Okay, where you are taking the classes from? Okay, no. I am I've been teaching the USA students, but I teach from India only. I teach USA students and all over the world. I teach for that CDCS exam, London exam. But I do take the classes from India only. I'm not from outside. I don't. Yeah, for a target batch. Yeah. Okay. Let me come to this. Yeah, those who are watching on YouTube, kindly join the classes. Okay. Yeah, kindly join the classes means see this. Let me bring in Adda 24/7 over here. Okay, join the classes immediately because the batches are yet to start in full swing. Okay, yeah, yeah, third class only. This is our third class only going on. This is a third foundation course going on, right? Okay, everyone join. Those who are on YouTube, kindly join. JB, one sec. Oh, yeah, let me see. Where is this? Let me bring in. Yeah, go to Adda 24/7 live. Okay, everyone. Then click on JIB and CIB. Clicked. Then click on CIB 23. CIB 23. Okay, CIB 23. Then click on the English batch. Okay, click on the English batch. Then you'll see the details. Go through the details. Okay, what are the dates, timings, what are the study plans, everything you'll get it over here. Then look at the fees. Okay, the fees part it's reduced over here 78%. But click on more offers. Put the code Y432. Never forget this code Y432. Okay, put the code Y432. Click on apply. Look at this, 80% off you are getting. So 23,999 reduces to 4,799. Huge discount. Okay. Also, look at this. You can join the Mahapacks also. In Mahapacks, you are getting 15 plus batches. Those who are in the batch also. You guys can also join the Mahapack. If you have taken the batch, you can take the Mahapack also with the reduced price. Click on this JIB, CIB Mahapack. Click on CIB ka Mahapack. Once you click on this, you'll see the details. See this. 15 plus batches for per subject. 15 plus batches per subject. Then this mock tests are available. Tests, this ebooks are available. Everything is available over here. Okay. And look at the fees 7919. But still wait. Click on more offers. Okay. Click on more offers. Put the code Y432. Y432. Click on apply. See this again 80% off. 35,996 reduces to 7199. If you are on the app and you have coins, you can get almost 1% extra in this. You can get almost 81%. So use app basically, I would always suggest. Okay. Yeah. So we'll stop over here. Okay. When will BFM class start? BFM is in April, I think so. 17th April we are starting. Yeah. Yeah, 17th April. No, ABM will take around 1 month, at least 1.5 month roughly. It's scheduled over there. Yeah. Yeah. Link for I'll give you the link tomorrow. Okay. For this Mahapack. Okay. I'll give the link tomorrow. Chalo, bye everyone. Okay. Bye, bye, bye. Bye everyone.